Okay, good morning, everyone, and welcome to the European crossover webinar. And apologies, I had cleared out my cache and my cookies, and it actually reset everything. I mean, cleared out the cookies for everything, not only just, completely everything. This morning, I actually couldn't even log into my Reuters. I remembered what the password was, and then when I tried to log into Zoom, same thing, asking for the password. So sorry about that. Apologies for the delay. But we're all set and ready to go now. So let's go on and move on. And but thanks again, once again, for your patience. So yesterday post Fed meeting, we did go and see the dollar going to give back some of its gains. I'm not sure why TradingView has it like this. You can see here. Every once in a while, I'll see something like this. See if I thought it was going to reset itself. It apparently hasn't. Hang on, let's go to. And let's go back to daily. Let's try something else also. That's odd. I don't know why it's missing yesterday's bar completely. But we'll go and move into the 2-hour chart then. Hang on for the cash dollar index. I see this, and usually TradingView will correct it. I'll pop back in and show you again. See how there's that gap there? It's like yesterday's bar is completely missing. But we'll go on and switch it into the 2-hour. So we've been looking for a move down to 97.20 with a possible, I don't want to say a stretch, but additional support at 97. We got to 20 and we kept pushing further as the euro even pushed higher, and other pairs also pushed higher against the dollar. So we did go in and come down here, made it to the 97.20. That's where I was coming up with the 20. You can see that there. And then obviously we pushed lower. We got as low as what, 97.03. So I had some additional support at 97 even. Probably isn't surprising. I mean, one of the things that we talked about was that we'll go on and switch back into the daily so we can, although it's not showing yesterday's bar. But one of the things we focused on the daily was that, and I even addressed it in yesterday's daily FX roundup again, but which was, we had already addressed it here, was on, we had already slid down here, and we had, on Friday we had that phenomenal number. Phenomenal, I mean, it's very good. It was a very good number. It's 266,000. Some people try to downplay it, saying, "Hey, well, the GM strikers came back," but we had an upside revision. Excuse me, upside revision. So with that, we should have not only. My thoughts were we should have not only closed above 97.89, but if we couldn't close above it, we should have at least taken it out and let's say maybe close underneath it. We didn't even make it to 97.89. So my analysis, as you remember at the beginning of the week, was, okay, well, they weren't able to do that. So we're still on target for a move to down to 97.20. But it actually obviously went past there, came close to all the way to coming up to 97 even. So just wanted to go and touch base on that. The euro, conversely, or I should say almost inversely, because the euro comprises 56.4% of the cash dollar index. One of the things we were looking at the euro yesterday, you mentioned also on the webinar, I think I mentioned it here too, but I know in the daily roundup was, hey, look, we had come down here and we're still holding up overall. Bear with me one moment. And we said, hey, look, we have major support here, 1020, but it's kind of holding its own. We even had this push here, and I go, but the key is going to be a daily close of 1105. But the reason there was still hope for the euro dollar here was just because of that. When I would do the euro, and I usually start my analysis with the euro, I'd flip it back to the dollar index and go, that's the reason why bulls still can be hopeful, or bulls, there's still a little bit of a decent outlook here with the euro, because of the cash dollar index inability to go on and not only not close above 97.89, that huge weekly pivot on Friday when we had such a very good number, 266,000 with an upside revision, but we couldn't even take it out just intraday. So That's why the door was still open for us to potentially move a little bit higher. I thought we could move higher, but I'm even surprised that we were able to get this high. My upside was 1131 here on the euro, and we didn't go flying past there, but certainly we did get past there. Now, that being said, the only reason I don't think we didn't get past there, although I got to give it props, I thought we would stop at 1131 and pull back. Now, we're just below 1131, but I thought that we would get to 1131 and start paring back immediately. But that's only because the ECB, tomorrow's ECB, so we don't know what kind of risk. I mean, some people are thinking that Lagarde will maybe, open up the floodgates or something, but if not, then we still have the opportunity to go and move higher here. So I just want to go and touch base on that. Let's go on in. Let me pull in what we're looking at for data. Okay, I did get over the squawk saying, I think it said Trump is meeting with his advisors to discuss the December 15th tariffs. So I just want to go and let that. I've got, trying to do the webinar, and I've got the squawk in one ear. So, but it did say meeting with advisors to discuss the tariffs. See something from Xinhua. Imposed tariffs, China will surely retaliate. Such a trade war escalation scenario has been played several times. Washington won't be so naive to still believe it can crush China. That's what Xinhua is saying. That's at China's news. Okay. So, like going into the data today, we did have a French CPI that came in just as expected. And then at the top of this next hour, we do have Eurozone industrial production, which we have Reuters poll to come in at a negative 0.5%. As we come into today, we do have some German data. Let's see here. Those are actually coming in at 6 a.m. Eastern. And that's the Ipsos Consumer Sentiment Index. And that's going to be for Germany, France, UK, Italy, Spain. Well, that's odd. They're all coming in at the same hour. And once again, that's the Thomson Reuters Ipsos Primary Consumer Sentiment Index. So obviously a proprietary index, but it's all coming in at 6 a.m. for Germany, France, the UK, Italy, and Spain. Later on, we do have Mexican data. That's going to be industrial output, as well as, we do have today. God, I can't believe I didn't think about that. I'm thinking today's Wednesday. We have ECB today. I was just saying that one of the reasons the euro probably didn't break all the way out, and we're actually seeing the euro pair back. Look at this, 11.27 now here in the euro. We do have jobless claims and PPI final demand today. So let's go move this out of the way. Yeah, let's go and just pull in some news. So the Australian New Zealand dollars break higher after a bear squeeze. The Australian New Zealand dollars held hefty gains on Thursday as markets took a steady outlook from the Federal Reserve as a dovish signal, lowering U.S. yields and triggering a vicious squeeze in U.S. dollar long positions. Aussie was up 68.77, having jumped 1% overnight to a one-month peak of 68.89. That was the sharpest one-day gain since January and snapped stiff chart resistance at 68.62. Yeah, remember, I had my bias chart resistance at 68.65, said, and I wasn't even sure we'd even get past, which was going to be a key daily close, 68.67, but sure enough, they did. Speculators had amassed large short positions against the Aussie in recent weeks as domestic data remained soft, and many were stopped out by the speed and scale of the rally. It is possible that the Aussie dollar lifts to the 200-day moving average at 69.12, said Richard Grace, Chief Currency Strategist, CBA. But at this stage, with a weak domestic economy, we believe it will find levels at 69 cents challenging to sustain. The squeeze spread to yen positions, where the Aussie shot 0.8% higher overnight to 74.61 Aussie yen. Likewise, the Kiwi had reached 65.84 after rising 0.6% overnight to a fresh 4-month top of 66.03. Both currencies had already been on the rise before Fed Chair Jerome Powell jolted markets by emphasizing it would take a significant and persistent acceleration in inflation for the central banks to even consider raising rates. The Fed board had earlier indicated rates would likely stay steady for all of 2020 and trimmed projected hikes in the 21 and 2022. Aussie yields lagged, narrowing the gap between 10-year yields and 10-year yields to 64 basis points from 71 basis points. The next major hurdle for markets will be the UK election, where exit polls should appear around 2200 GMT, which is early Friday morning in Australia. The sterling has been rising steadily, and expectations as a Conservative government would win a re-election with a majority and lessen the uncertainty over Brexit. As a result, a hung parliament or a win by the hard left Labour Party would likely see the pound fall sharply. And lastly, I used to like to do the what was it called? The morning what was it called? The morning brief or something like that. But for whatever reason, I haven't seen that thing. I don't know if it ever since the time change, I just don't ever see it come out. But anyway, let me go on and move on. Dollar knocked in rush to quit long bets. The dollar nursed its steeper losses in weeks on Thursday as the Federal Reserve forecast that it would hold rates through 2020, sparked an unwinding of long positions in the greenback. Investors were also on edge of Sunday's deadline for a new round of U.S. tariffs on China and European Central Bank meeting and the UK election later on Thursday. The dollar hit its lowest in more than a month against the euro at 11.43 and stayed there, while sterling drifted higher ahead of the election against a basket of currencies. The dollar set at a 4-month low of 97.03. The Japanese yen held up overnight gains at 8.55. The Fed has basically given the market confirmation that the 3 rate cuts we recently seen are not going to be reversed anytime in the next year, said Stuart Oakley. Dollar rates are lower, and they're going to stay that way for a while, he said. Fed Chairman Jerome Powell said the economic outlook for the U.S. was favorable as the central bank announced its decision to hold rates steady as expected, though forecasts only moderate and slowing growth through 2020 and 2021. New economic projections showed 13 of 17 Fed policymakers foresee no change in interest rates until at least 2021. Amongst the biggest winners were the Aussie and New Zealand dollars, which soared as shorts scrambled to sell. The normally somnolent Hong Kong dollar also climbed to a 5-month high, with some analysts attributing the gains to profit taken as investors unwound lucrative carry trades ahead of the year end. Long dollar bets hit a 5-month high against last week, bets against the Aussie at record high. At some point, even a stable Aussie should eventually be enough to for some of those positions to be trimmed, said Westpac analyst Sean Callow. But the Aussie's just declining to collapse, and it's held up better than would have expected. Investors' focus now shifts to the looming trade deadline, Christine Lagarde's first meeting at the helm of the ECB, and voting in the British election. President Trump is expected to meet with top advisors on Thursday about the trade tariffs. 3 people familiar with the plans told Reuters, and yes, I just came over the squawk, like I said, as I said when we were speaking. A 4% familiar with the administration thinking said they expected the tariffs to be enforced. Lagarde is all but certain to keep money taps wide open, but investors will be curious to tune in to her post-meeting conference to seek clues about a broader policy revamp that could become the cornerstone of her tenure. That is due to begin at 13:30 GMT. Before then, at 7 GMT, voting begins in the United Kingdom, where polls have tightened recently, but still predict a Conservative victory. Pound is priced for a Conservative majority that would control Parliament and lead Britain out of the European Union at the end of January, and anything short of that could prompt a slide. The dollar's weakness of helping sterling edge up to 32.17 on Thursday. Cable's overnight implied volatility has soared to its highest since 2016, since the Brexit referendum. Prices should jump around with likely sharp reaction as each constituency releases their results, said Chris Weston, head of research at Melbourne brokers Pepperstone. One for the bravest of souls. So with that, let's go on and move into our analysis. Go and get started. So it says the euro was able to close above 1109. We talked about that being a key number for bulls to, get an extra reach higher and allowing for bulls to resume control. Short-term target is 1180. Now that's going to be the short-term target here that we're looking at. You can see right there. See 1180. So it's going to be a short-term target. Resistance is at 1152. So we came up short of that here in Asia. Support is 1109. Now, obviously, like things can be a little bit off the tracks because we do have ECB. What if Lagarde, says she's opening the spigots, and not that they expect that, but once again, if that were to be the case, we're going to see some pretty good volatility. So bear with me. So we're going to go and put the resistance we're looking for is 1152, but where can this market go to 1180? And once again, if all things play out, we could potentially see that 1180. So let's go on and do this to 1180. We're going to change the bias to bullish because we were able to close above 1109. That doesn't mean it was wildly bullish, but we did close above 1109, and that was key that we had spoken about for this market to go on and resume a further move. And you can see right there, 1108, close above 1109, and that turns us back to bullish. On the downside, we will be looking at 1082, right there, 1082. Let's go move into the cable. So the cable closed at its best levels on Wednesday. Resistance is 32.65, and you can see that level coming up here, confluencing with the range extension of 32.44. You can see here. Look, all bets are off the table, obviously, with the UK election, on top of us at this point now. We had an intermediate target. I already discussed this, included on the FX Daily Roundup. We've talked about this 2980. It mentioned, hey, if we ever get past 2980, we were looking for a move up to 3208. Well, we did make it there. We got up to 32, was at 15, and we paired back, actually. And then we saw the market come back yesterday. Its best close. So resistance now I'm looking at here is this range extension. You can see here's the range, here, right here. Extend that. That puts us at 32.44, 45. And then this level right here, 32.65. Now, I'm not saying that's the end all, the be all, because if we do get a victory for the conservatives, we could shoot up maybe to 33.40. But the key to me, I think, is going to be how the market reacts in this area right here. And that's 32.65, 32.44. If we, let's say we rally up to 33.40, maybe we take it out and we come back and we close just below this area right here. Actually, let me go on in. So if we close it, if we rally past that, but we close below this 32.65, and you can see that's confluence with 32.45, which is this range extension. Here's this range we've been in. See that? Right there. You see? So add that right there. So you can see here what we're looking at right now. So if we do, then it really would open the door for us to pull back. We shall see. So resistance is going to be 32.65. And support. We had, I'm going to stick with this 30.87, but once again, all bets are off. It's going to be, you know, it can be wild. Let's go on and move in now to the Aussie dollar. So the Aussie rallied on Wednesday, closing above 68.67, allowing the pair to eventually challenge an upside level of 69.14. Let's go this down here. Before major resistance, which would be 69.44. Support is now going to be 68.48. And like I said, we were able to get above the 68.65 and even close above 68.67. And it's almost seemed like we're talking about 2 pips, 3 pips, but you have to consider, look at the range we've been in. I mean, when you put this in context, then you can see, look at this tight range we've been in. So why it makes such a big deal. But we were able to go and close about 68.67, turning this market now to bullish. And it actually been bullish because we gave it the benefit of the doubt, remember, because we had rallied past 68.50. So we're looking for a move up here to 69.14 for starters. That isn't even that far away, but overall we're looking for 69.44. But for starters, our next resistance level is going to be 69.14. Support is going to be, we got it at 68.48, and we're coming out right there. You see right there? So that's what we're coming with the support. Let's move this down here. There we go, 68.48. And let's go move into the Kiwi. Okay, so the Kiwi closed just ahead of the bias chart resistance of 65.87. And actually, it's not even showing a close. Yeah, we did. Okay, I thought I was thinking it was up in here. So it closed just above the bias chart resistance, which is 65.87. That's the 50% of 62.03 to 69.70. The resistance will be 66.32 with support at 65.21. So we closed just above this, but and there is some short-term resistance here at 66 cents. We did see that. But if this market if we do see this market as we go towards the end of the week and see the dollar lose some of its grip, where can we go to? And that's going to put us here at 66.32. It's already had a pretty good move already at this point, but I don't want to put the resistance just at 66 cents. I don't think we could easily blow past that. And I want to put into, if we are starting to see these moves, you want to go in and put in context where it can go. And so we're looking for up here to 66.32 on the upside. And support's going to remain at 65.21. That was the bias chart support for yesterday. We'll give a little bit of room. Actually, we had 20. We'll put you at 21. Doesn't make that much difference. And let's go and move into the dollar CAD. Well, the dollar CAD continued to remain weak after that sell-off we saw the other day. So since the dollar CAD finished the day on the lows after taking out support, that support had been that 3205 here. So we finished, rather weak. I mean, we had seen a nice turnabout on Friday after we got the employment data on both the U.S. and Canada. We rallied back, but we came up short right here, right there, stopped in the tracks at 32.72, and then we started pairing back. And then we had support yesterday for 32.05, and it broke through that support. And really, the next target that we're looking at right now is going to be 31.36, and the resistance will be 32.05. And because we lost 32.05, we're going to put this for bearish. So potentially we're looking at move. There is some additional support coming in here, but I think we have to focus on where this monkey can go to at this point. And it's not that that's that far away anyway. Although moves recently have been really across all the pairs, as y'all know, have been fairly tight overall, but still going to go with the 31.36. Let's go on and move in now to the peso. And this thing has really come off, and actually looks like we've already hit our extension target. So the analysis that we did in the Asian session says the dollar peso extended the move below 1923.6 level. Support is 1908 with a potential move to 1902. Resistance is 1919. Well, it looks like we just made it to 1902, 1901.80. So we're right there, right there. Oh, no, we're not. Doggone it. I was getting ahead of myself. So once again, it says that support is going to be 1908 with the potential move to 1902. So we're just about there. So it's actually 1908. I don't know what I was looking at. But we're looking for a move down here, right there, 1908. And potentially we could slide all the way to 1902. So it's 1908, though, and resistance is going to be 1919. We see a bit of a rebound. I doubt it, but that's what we're going to go with. We can actually go back with the rebound, which before previously was a key level. So we can go with, yeah, there's right now 1919. There was an intraday move, if y'all remember. We had a lot of trouble at 1916, but we'll stay with this 1919, and it's obviously bearish. Let's go on and move into the dollar yen. And no changes here in the dollar yen. None. I mean, we've had our bias chart resistance from yesterday, which was 887, which has kept this market capped and in tow. And support, although we've had a tight range, we've had our bias chart support down here for 828. So no changes here on the dollar yen. And I don't know what's going on with TradingView, why it doesn't have the dollar index the way it should be. Obviously, yesterday's bar is completely missing. But let's go on and pull up the analysis on the cash dollar index. So the dollar index reached its target of 97.20 and then some. Support is 96.87 with resistance at 97.37. So right there is where we're coming up with the 96.87 right there. You see that coming across here? Right there. So it's going to be 96.87. And we'll go and move into the cross rates now. Well, we're into the zone here that we've got here with the Kiwi yen. Obviously, the Kiwi continues to strengthen a bit here. So we got a nice close yesterday into this zone here with 71.45 to 71.77, which is the 78% of this entire move here. I'm not sure how much further it's going to stretch, but resistance will be 71.77, the top of the zone, which happens to be, as I said, the 78%. So we are a bit long in the tooth, though. And support. See if we can get a little closer look. And actually, the bottom of that zone was 35. I don't know why I had that at 45. Support is going to be right there. $71.12. Moving to the euro yen. Obviously, with the strength of the euro, I don't want to say it's, let's not go overboard, but we've seen the euro move higher, but I mean, at least we stabilized here. And this was an interesting move here, and got to give the euro some props here in the sense that, and I'm talking about from a technical standpoint, we had broken this 2030 and really opened the door for us to move down to 1971. That's what we're coming with this level here. But we actually held on Monday. And then we turned things about on Tuesday and added on to it Wednesday. So we closed above this key level here. So it turns it to bullish, and that key level is 2076. So we closed above it, so we got to mark it for bullish. And resistance now is going to be, and with the ECB, if things do turn out, okay, euro decides to extend, that's where we got to go and look at how far this can push. Now this, let's see, that's not too far higher. It's 21.35. So it's going to be 21.35 on the support. So who would have thunk it? The euro yen now bullish and 21.35 on the upside. And let's see. Support now. Yeah, right there, 2029. Let's go move into the euro odd. Boy, this is something else. Look at this. We've talked about this. I'm going to go over it again. So we broke lower, and it looks like we're going to move down here to 60.95. We come back. Okay, then we We even rally up in here and finish on the lows, but we do have an inverted hammer. So the market swings back, and the bulls are going to make a stand. But then the bears take control with a bearish engulfing candle, and then it looks like now we're going to head to 60.95. But then we hold our own here. We extend that move to challenge up in here, only to turn around and roll all the way right back down again. So this thing has me with my head swimming around back and forth. I feel like I'm watching a tennis match as we go from one side to the other side. I just don't know with this thing, but of course we have the euro strength, but then we also have the Aussie, which has found some newfound strength. If the euro moves after Lagarde, we could move right back up here. So we're going to say 62.50. On the upside, and it is indeed well into a range. And then on the downside, which we still can't get there, we're going to go with 61.21 for today. Let's go and move into the Euro Kiwi. Well, we talked about this yesterday and how when we finally broke here and we made this run down here to 71.31, which is not surprising at all, but we continued that fall and eventually came down to 69.42, and you would have thought, okay, that's it. And especially look here where the market, I wouldn't say it's a medium-legged doji. We finished not perfectly in the middle, but you're thinking, okay, now they're going to make a stand, only to turn around and fall even further, coming down to the 68-cent level here. We've rebounded, so we had said, okay, that was going to be support to 68.06, which we were expecting an upside return back to 69.42. We got that. We actually had put our resistance for 70.56, and we're going to stay with that, 70.56. The downside, it's going to be right there. We're going to go 68.55. Seeing the SPOOs jump up to 31.50 right now. That's not that much of a big jump. We were at 31.49. We'll get to that, but a little bit of move here. Let's go move into the Aussie yen. And we are seeing the Aussie yen finally break out. Finally here. Some movement after being such a quiet market. And we've been holding this trend line here. Upside resistance. It's going to be right there, 75.35. Support, I don't know if I want to go all the way down to 74 cents at all. So, I'm actually going to move support for right there. 74.29. With that, let's go move into the guppy. Well, today's a big day, and who knows where things can get to. We have been just right here at this resistance level of 43.36. You can see the importance here. But what we're looking for potentially is a move up here to 44.12. Look, I say potentially, but who knows? I mean, if they get a blowout and the conservatives win, we could easily make a run up here. You see right here, right there, 45-14. But for right now, although we've had a pretty good run, I almost feel like it's going to go beyond that, which is 44.73. But we'll go with the technicals, and that's going to be 44.12. It's not even that far away. We'll go with that. Let's see if we can close this a little bit. It's 44.56. Right there, 44.60. I'm actually going to go with this low right there. You see there? That one, let's pull this back. That low, 44.76. We'll call 44.77. So support on the downside is going to be okay, let's go 42.41. If we had 42.40 slash we'll go 41.43. And these are just areas for the market to look at. I mean, obviously we can blow well past that if depending on how things turn out, but that's areas that we're looking at. Let's go into the sterling nod now. We have gone and paired back, obviously because of the strength in the Aussie. So upside resistance is going to be 93.19. Downside, $90.55. $89.80. Let's go back into the cable. We got 32.65 and 33.40. SMB's Jordan says negative rates will remain as long as necessary. So in case anybody's trading the Swissy. I mean, that just popped over the squawk. Support. We do have the 3087, but what are beyond? Well, it takes us back to the pivot 2980. 3087. Let's go 3026. Coming across. 3026. There we go. Doggone it. Okay. So let's go and take a quick look here on the other markets. So we just saw that pop up here in the S&Ps. We'll just take a quick look on that on a 30-minute chart. S&P Jordan says he has no idea when they can change negative rates. He did say they would change it if they saw CPI get better. Look, it's really all about those sanctions in January. On December 15th, it came across that Trump and advisors will be meeting to discuss what they want to do. Blake posted a story on Bloomberg in the chat room about Navarro's, how we call it, alter ego or whatever thing. And I mean, that he's using like a, what do you call it, a pen name or something like that. But anyway, that the thought is that they're going to go and impose those sanctions. And they said, ride it to victory. I don't know about that, but I guess they're thinking is instead of letting it drag out, why don't they impose a sanction and appear to go tough on China? And that's the best way to go instead of letting it drag out. You know, obviously the equity markets are going to get whacked if that happens to be, but we'll see. We shall see. Let's go on and move back into other markets. Obviously, we saw gold turn around. We talked about that yesterday. We talked about how gold's been holding pretty steady overall, and that, and we referenced that it'd been holding here. So away. I think we've mentioned right here at the 1458, which was important for the, and that's actually 1459, which was important, I say important, but I'm saying on the XAU, the cash was 1454, and around here, I was saying 1458, it's actually 1459.20. And that how the market had done pretty well, and that potentially I said, look out, we might push higher. And boy, did they push higher yesterday with the thought that the Fed's going to be holding rates. So they pushed higher. Pull back a little bit, but this market's susceptible to definitely moving higher. One of the things we talked about yesterday was we've held up so well here that those that did get long are going to have a lot of room to play with and aren't going to let go of the long. So the next key level, I think, would be 1,500, and we can easily get past that because a lot of people, we've been able to accumulate positions from down here, so we can really make a move up in here in the gold market. Haven't looked at crude oil. We'll probably start to focus on that going forward. It's still stuck here around $59. We'll see how things play out. I haven't done anything with gold. With crude oil in quite a bit, well, several weeks, because of the nutty ways that it was traded. Now we're starting to quiet down in this market, which is really unusual. Look out the tight range. We'll see how this all plays out, but just want to go and touch base on that. We'll start to cover that a little bit more closer. going forward, maybe start as early as next week. That's all we have, but thanks for joining us here on the European crossover webinar. Apologies for the delay. I did go in and clear out doing some maintenance work and clear out my cookies and cache, but the cookies actually wiped everything out, so we had a delay logging in because I didn't save my credentials for the Zoom. I couldn't even log into my Reuters initially. I had to, but fortunately, I was able to remember the password. So, but then anyway, thanks for joining us. We'll see you on the FX Daily Roundup. Good luck trading. We'll also see you in the chat room.